Does this round of optimism feel any more different than ones in the past?
I think it does a little bit. I think you also have the president not exactly lowering expectations here. The president's super positive. You have the cabinet positive. Markets reacting to that. And listen, and I think in the end, markets are not really going to care very much about the details of any deal that's struck as long as a deal is struck. And directionally, it looks like we're going toward de-escalation rather than escalation. I think that's a very doable goal.
Kevin, does that explain the strength that we saw, at least at the open?
I think so, but I'd be careful of putting too much weight on any one thing. But if you look at China, China's stock market is off over 30%, trading at levels where they haven't been since 2014, and manufacturing there is weakening. So overall, China in particular needs to see some enlivening action in their economy. And to take the threat of a protracted trade war off the table would be a big win for China. So the devil's in the details, though, and remember that if they're looking for structural reforms, those are going to be tougher to come by. It'll be interesting to see what comes out of it, but body language is good here for sure.
Yeah, I'd also keep an eye on what this deal is really going to require of China. It's probably not going to be like an off-or-on thing where this could be a phase down over a number of months or even years as China meets certain goals. Listen, if this is going to be a real deal, that's actually going to change how the U.S.-Chinese economic relationship, it's going to be a tremendous monitoring operation by the United States. I'm not sure we're really ready to do this under this administration, which has had trouble even filling basic positions. From that perspective, that's a long-term thing. But like the good news pop that, yeah, we're not going to have more tariffs and we're not going to have 25% tariffs on everything, that can come right away.
I mean, Kevin, we don't have an accurate picture exactly as to how it's affecting us because some of the data releases are being delayed because of the partial government shutdown, including today's trade report, which is why I think there's so much emphasis being played on some of the surveys, which have actually shown some weakness on the U.S. economy. What's the latest on how much damage this is doing globally and to the U.S. and whether, even if we get a deal, there could be more months of pain?
Yeah, well, we just published our outlook at Washington Crossing on our website, and it's all about the trend this year, which has been weakening foreign conditions, some concerns about a very significant ramp up in credit in emerging markets, and a dislocation between emerging markets and China performance versus the United States, which has really been an island of strength and prosperity the last year. Ultimately, though, we are tied to the global economy, especially China. So if we don't see an improvement there, that could make for some tough sledding in 2019. Ultimately, this trade thing has to be resolved. But as I said before, the devil is in the details, and structural reforms are very hard to monitor and very hard to achieve.
Yeah, and
Jimmy,
I think your risk here, and I think, oh yeah, go ahead.
I was going to say, let's just switch briefly to the politics of government shutdowns. Do you expect the president's address tonight to change the calculus surrounding that? And, you know, a lot of headlines swirling about how the shutdown is starting to bite, quote unquote, as we're into a full pay period now for some workers. I mean, how does this matter to federal workers, contractors, and the economy at large?
Yeah, well, listen, it's a lot more uncertainty. If this thing would go on week after week, there's already analysis out there showing, it's knocking off, 0.1% of GDP every week it goes on. You expect to catch up on the other side. But I think sort of the risk here is what the president does next. It sounds like they've sort of given up on the idea that they're going to win this battle, a straight up toe-to-toe battle with Congress, which is why now you see the president talking about emergency action. I think this speech tonight is laying the political groundwork for that. And then that could be a complete mess because there could be litigation. It could go to the Supreme Court. So there you have the president's third year being consumed, hopefully no longer by this trade war, but by litigation about the wall and immigration. And we don't know what happens with the Mueller report. So if you're looking for Washington to do positive stuff, this is not a good direction.
The Trump administration gets another high-profile appointment opportunity with the World Bank president, Jimmy, abruptly resigning 3 years early. I mean, this could really be a chance, I think, for the president to put additional pressure on China and emerging markets who have been fighting for more of a say and more influence at these multilateral organizations like the IMF and the World Bank. And when it comes down to it, this is going to be an American appointment.
It will be an American appointment. Peter Navarro, we have a new assignment for you. China would not want to see that. Right. So you could really put someone in that position who very much reflects the president. And listen, the U.S. remains a very powerful, influential country, and we have many, many levers if we want to make things painful for Beijing.
Hey, finally, Kevin, I know you've been suspect of the markets going into the weakness of the fall, and I wonder if the action of the past 4 or 5 sessions has made you think, all right, time to jump back on the train.
Well, not really, although there are some positives. The positives mostly would be a correction in valuations that actually lifts forward-looking returns. But what we haven't seen yet is a turn in the foreign data and investor enthusiasm. The data here in the United States, employment, that kind of stuff is strong, but we'd like to see a pickup in investor enthusiasm. And to that end, if we do get some relief on things like trade and interest rates, that could boost enthusiasm, which could feed back into the economy, and maybe that's the turn. So we're thinking maybe we see a turn in the next couple months, but we're just not seeing it in the data yet.